This is for our stock options newsletter. It is expiration week for stock options, and currently we have in our newsletter 4 different December stock options open. What we're going to be doing is closing 3 of them today. We're going to hold off on one of them. I'll tell you why. We'll talk about that in a second. But it's Tuesday. And on Wednesday is the FOMC meeting when the Fed is probably going to say they are raising interest rates, which is going to make the markets burp and jump and do weird stuff. Now, we got 2 ways to play this. We can close all our options today, which is the safe thing to do, and which is what I'm recommending for a newsletter because all of our stock options, except for one at the moment, are profitable. The other thing to do is because the stock options we're closing at the moment are all bearish options, and what's probably going to happen on Wednesday is the market's going to drop. It means if you hold on to your options, you are likely to get even more profit than you already have. So if you want to play a high risk, high reward strategy, don't sell your options today. Sell them on Wednesday or after Wednesday. If you want to play the safe strategy, which is what I'm recommending today, then just follow through with these closings, all right? Now, you might not have all of these open, but if you have at least one of them, this video is going to be good for you. Also, I'm making this video public to show how profitable we can be with stock options, all right? So the first one is IMPV. IMPV was a bear credit spread we opened a while back. Let's take a look at what happened to IMPV. We wanted it to go down. IMPV. We wanted it to go down, and it has gone down from, where was it? I believe it was like 70 when we first opened this. The lower part of the spread is a $65 put option that we sold. If IMPV is not below 65 by Friday, what you want to do is you want to buy it back. But it's probably going to end up, as you can see, it's continuing downwards. It's probably going to end up below 65, so you don't need to do anything. You just let it expire. When you do a credit spread, if you let it expire, there's no problem. You just keep the profit that you've already taken. And because we sold it at $450, $415, you just get to keep that. So if you did 1, you get $415. If you did 2, you get $830. You don't really need to do anything with IMPV. Just let it expire. All right, that's IMPV. Now UNT. Unfortunately, I don't have a picture of when we opened IMPV. But next one is UNT. We opened a put option on, just a straight put. And I also mentioned this in the price gap newsletter, but that was a short opportunity. So we were at 16.59 and we saw this little area gap down here, and we bought a put UNT. Now we bought it for $183. You could see UNT dropped as I had predicted, and it filled this gap right here. Now we are at 12, and it's going to be a very profitable put option. As you can see, we can sell it for $545. How are you going to do that? UNT, order type, sell to close, how many contracts you put in. It's a put, December, strike price was 17.5. You do a limit, and it's a big spread, unfortunately, but you should be able to get pretty much in the middle. So do 5.45 and then place that order. Now, if it doesn't fill within 20 minutes or so, cut it down to 540. And if that doesn't fill, go down to 535. In any case, we made a huge amount of profit on this. We spent a little under $200 and we came out with a little under $600. So that's almost like a 3 times increase. That's 200% profit. Next one is VXX. VXX is almost always safe to buy puts on, almost always safe to short. It's a really bad ETF that always drops, and I love playing VXX because it's almost always a sure bet, especially if you have a gap. Now, we played this gap, and it did fill, but I was expecting VXX to continue downward. Unfortunately, that didn't happen. It jumped. We got a new gap right here, and this gap should fill. Unfortunately, because of what's happening on Wednesday, the volatility might jump again, and we might even see VXX higher. At the moment, we are about halfway of our percentage downward in terms of the value of that put option. So this might be a losing put option, unfortunately, and that would be the most surprising of all of these, because VXX is almost always headed downward, whereas all these other stocks are usually headed upward, and we were playing puts on them. So we were betting against the current for all the other stocks that were profitable, and we were betting with the current for VXX, and we were wrong. So obviously this month was a strange month. So hold off on that. I'll give you an update. We might just have to let it expire and just take the loss. In any case, we're taking a lot of profit this month. So we already took a lot of profit with our other close alerts, but we're taking a lot of profit on this expiration week. So don't worry too much about VXX. Next one is Apple. Apple had were we playing an area gap, or we're just playing a normal option? Let us take a look. My internet's, it's not my internet, my browser is really slow these days. Here we go. Here was the alert I sent. I said buy the 115 puts. We had a sell signal. I don't know why I wrote buy signal for a put. Yeah, and we were playing this area gap right here. So that was when Apple was at 118. We played the 115 puts, so we're going to type in AAPL. If you played this is how you close it. AAPL, we will sell to close. I said to buy 2. I'm just going to say you bought 1, assuming that you don't want to play 2. December 18, the 115 option. We're going to limit, and we're going to shoot for $300. Okay, so there you go. As you can see, Apple did drop in that area gap. I already typed that in. That area gap did fill. I think it was this one we were playing. So it did drop, it did fill, and went way further down. I've already closed my Apple put, and I'm going to be opening an Apple call. This is not an area gap play, or is it? We have small gaps. Anyway, I think it's going to reverse by January, but here's how you close it. And that's it for expiration week. So we're selling 2 put options. We're letting a credit spread expire, and we're going to hold off on VXX for the time being. Now, in terms of profitability, we got about 150% profit there, maybe 150% profit there. This, because it's a credit spread, we can't really calculate the ROI. And here we probably lost $100 or so. Overall, without including those trades, our overall ROI of the stock options newsletter is 87%, which is great for the time of what I think we started back in January. So we can just say we've been playing for a year, and we're making 87% per year of whatever we invest, whereas the standard index fund is probably only getting 7% per year. So I hope that this has convinced you that playing options is a very profitable trading strategy and beats investment strategies even after accommodating for the fact that when you play these swing trades on options, you're going to be paying tax of normal income tax, not capital gains tax. So you're going to be paying a little more tax than the average investor, but look how much money you're getting compared to the average investor. So that's it. If you have any questions, send me an email, and I'll get back to you.